I think this is a very important phase, a make or break phase. Capital asset pricing model says the more volatile an asset, the higher its returns. And as we all know, Bitcoin for last year, this year, and 2023. I don't think it's weird at all. It's something that we've seen over the centuries, even over millennia, because even the Romans did it, right? The debasement is a real thing. It's a very profitable thing to do for governments because they need the money for warfare and welfare. So even the Romans, they debased their currency to the extent that the silver content of the denarius was 90% and it dropped to 10%. Even to the level that the Roman soldier said, we don't pay us in denarius, pay us in gold or homes or land, but you keep your fiat. and so we're seeing that right now again, and since 1971 in an accelerated fashion, that the central banks are basically creating money out of thin air. It's not a secret, and helping governments doing their thing. And yeah, that distorts asset prices, house prices, stock prices, Bitcoin prices, everything. And yeah, so the fact that we're seeing it is not weird. I think it's a normal thing, but it's weird to think about it because we also know where it ends, right? Or at least where it ended all these past times. So it's a very interesting time to be alive.
How do you guys think about valuing Bitcoin or putting some sort of valuation methodology around Bitcoin?
Well, it's very important. I think for every investor, especially the professional investors, you have to have some framework for valuation. And for equities, that's the discounted cash flow model that Jurjen talked about. Foreign exchanges, it's the arbitrage model with the interest rates, etc., etc. So you need a fundamental model, and maybe to start, it's a good thing to reiterate that indeed it's about valuation. It's about a model, a theoretical value. It's not about price. So of course the price has to. So it's above and below the valuation line, and that's okay, but the valuation is something different than price. So valuation is very important, and basically if I simplify it totally, you can use a lot of things to value Bitcoin. You can use indeed the non-zero addresses, you can use the transaction volume or the UTXO volume or the hash rate to make the link with the miners, or you can use the stock to flow ratio. You can just use time as an adoption variable, and basically they all show you one thing, that the price goes up and to the right. And then it becomes more of a personal taste, I guess, which one you would pick. And you can go very mathematical with it. You can do an econometric discussion about which model fits better, or which model has co-integration or is not overfitted, etc., etc. Or you can do a very fundamental perspective on it. And that's what I did with the stock to flow, of course. So what I like is, like the capital asset pricing model, it's just very plain. Capital asset pricing model says the more volatile an asset, the higher its returns. And the stock to flow model says the scarcer the asset, the higher the market cap should be. And in that case, maybe, it can be used as a very rough valuation model, certainly not as a short-term trading model. And as we all know, the model is indicating $100,000 valuation of Bitcoin for last year, this year, and 2023. In fact, for the entire 4-year periods. And of course, the price has been much below that. So the question now is the model invalid? Do we have to refit the model? Or will the next 2 years of this cycle be above that model valuation line? Say, for example, 150,000, which is only a 3x or a little bit more than we are today. And we can do that in, 2, 3, 4 months. So, and then it's in an entirely different world. But right now it's kind of very interesting what's going to happen. And let's see what's going to happen. I think the halving cycle is still very much alive. At least it was alive last time, right, in 2020, because there was one party talking about the halving cycle and stock to flow and price increase, but there was also a very large group on the other side that talked about the death spiral and the hash rate going down and Bitcoin going to zero, and Bitcoin was dead basically. And we've seen that same discussion in all 3 past halving. I'm quite sure we'll see that same discussion pop up again in the 2024 halving. So as long as if there is 2 views fighting each other, I think it's still there. Personally, I think the halving cycle will be there until we beat real estate stock to flow. So maybe 1 or 2 more times, but indeed it cannot go on forever. And I like the supercycle theory or scenario because it gives you a scenario that's very reasonable. And I like thinking in scenarios. So the halving is one scenario, the supercycle is another scenario. Maybe there will be more scenarios. But for me as a quant, or analyst also, but I have to see it in the data. I have to see the supercycle in the data. And right now, I'm not seeing it yet, and that's okay. So we have to track that. But for example, volatility. One of the things that within the supercycle theory view is that volatility must go down. And we've seen the last couple of months that we dropped 50% twice last year. I guess volatility is here to stay, at least for a couple more years. And it's also what makes the Bitcoin asset so unique at the moment. The very, very high volatility and accompanying return as well, the Sharpe ratio of 1. Yeah, in my view, it's that particular aspect, that the high volatility is not going away soon. So that difficult to reconcile that with the supercycle theory. Whatever the future may bring, Bitcoin certainly did enter the geopolitical scene, right? It's and it has come a long way, because it has come from a cryptographic programmer's toy, basically, to a collectible that has some value to an asset that even institutional investors take serious, like Fidelity, and companies use on their treasury accounts as money, like MicroStrategy. And right now we have seen, of course, the first country adopted El Salvador, which is a very small country, but certainly if that has some follow-up by bigger countries like Mexico, Brazil, or I don't think Turkey, but some bigger country would be opening the entire geopolitical discussion that was opened, pioneered by El Salvador. And maybe, I like to think in phases. Those are the phases, I think. Yeah, I think this is a very important phase, a make or break phase. And I agree with Jurjen that Bitcoin is too big, and governments will not choose to ban it, but to regulate it and to tax it. That's at least what we're seeing right now.
PlanB, I'm sorry to interrupt you. Yeah? That's just such a cool analogy that you have with the phases. Would you mind just briefly explaining the phase analogy for the listeners?
Yeah, phase transition is something from physics. The same thing can be different things. Yeah, that sounds funny, but for example, water can be fluid, it can be ice, it can be vapor. Just when it passes a threshold, the temperature, it would go into a different phase. And you see that in a lot of things. In fact, the dollar also switched phase in 1971, when it was, before that, it was coupled to gold. After that, it was not. It was just floating around and fiat. So Bitcoin also has these phases where it, like I said, jumped from a toy to a collectible to an investment, an asset, and maybe now to geopolitical currency. Legal tender, right? And it's the same Bitcoin, it's the same software, but it makes a jump in its physical assets. Yeah, I think that's very, very interesting, and there is a very fundamental dilemma or discussion with central banks to be had here, because if you imagine a small country like El Salvador making the step to adopt Bitcoin as legal tender, it shuts the door to the IMF, because that normally a country like El Salvador would get a loan from the IMF, and the IMF would have some criteria that El Salvador has to fulfill, and then it gets the loan and blah blah blah. But right now, of course, it's sort of fighting the IMF, or IMF is not happy, and it's opened some discussion. And for me personally, having talked to central banks and having worked with central banks a lot, there is a very fundamental thing about, on the one hand, Bitcoin being the best currency that there is, because it's absolute scarcity, because of its portability, because nobody can debase it, etc., etc. And the other story that central banks believe in, that a currency has to be controlled and has to be, you have to, like the Fed, be able to print money and to taper and to steer and control the economy. You have to accommodate when the economy needs it, and you have to tighten things up if it's possible. And I guess that control they're not going to give up unless they see that the absolute scarcity and the non-control will bring more benefits to the world. And that very fundamental, and I'm not sure if I say that right, but that very fundamental, I see that very fundamental difference in view between central bankers that just don't see Bitcoin as money because it cannot be printed. And Bitcoiners see it as the perfect money because the same argument, it cannot be printed. So we have to discuss that. And but the geopolitical phase is, I guess, the ultimate phase. Very much looking forward to that phase.